Good morning. Welcome to Quant Box Live. It's Monday, and a lot has happened already this week. But it's time to get your macro on. So welcome to Quant Box Live, where we uncover the best fundamental opportunities for S&P 500, FTSE, DAX, gold, oil, dollar, everything. Maybe even some Bitcoin if you guys want it. Anyways, so what we're trying to do here is use our AI-driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning by both institutional investors and retail, and a big one, seasonality, which helped us predict our current situation. We also now do market sentiment, which is pretty amazing. So anyways, I hope you love QuantBox. My name is Wayne McDonald. I am the founder of QuantBox.co. I am an economist trained at Harvard. Yep, a neat little school. People often say, is it worth it? Well, I had 3 different professors that worked at the Fed. I mean, not 30 years earlier. Their day job was working at the Fed. And their fun job was working at Harvard. So yeah, it was actually pretty cool. But anyways, let's move on with it. I've been trading for a couple of decades, and I've always been a trader based on fundamental analysis. Hang on, I got a hot mic. Where is it? Oh, whoever it was got it. Cool. So anyways, I've always used fundamentals because I've always asked myself, why is the market moving the way it's moving? I needed the rationale. Remember, like for example, a foreign exchange trader, all they're doing is trading money as it crosses a border. And if it doesn't cross a border, it doesn't change any value. So you kind of need to know those global macro trends. Those things also impact things like the stock market and the bond market. And all of a sudden you realize everything is moving in relation to everything else. And you get scorecards like this. Very cool. So anyways, let's get on with it. If you're watching this on YouTube, by the way, you're watching it many hours delayed. So I'm glad you're watching it for free. But eventually, you should join the community. Kick down, come clean. Don't be a holdout machine. Why don't you try? Take the trial. It's $8. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Let me log in. So first step is you have to log into your QuantBox account. Second thing you need to do is log into the appropriate database. It's not a website. It sits on the Google Cloud. So now you got to reaffirm that you are logged into the right Gmail account. I am not, so I will switch. And now I'm logging into the Google Cloud. Now, QuantBox is pulling data from all kinds of data sources, and we're doing our own calculations, and we're displaying them with pretty colors. Really, QuantBox is just probably 1,000 spreadsheets. Not really spreadsheets, but that's what it looks like. Cool. So anywho, what's going on in the world right now? Wow. Is that right? The yield on the 10-year, is it really that high? Holy smokes. Is that, I don't know. I want to double check that. Because that means the bond market is crashing, and there might be a reason for it, and we'll talk about it in a second. I just want to double check that because that is crazy. Yield, 10-year U.S. Treasury government bond. I'm getting ads popping up. Look, trying to find information. It's nothing but ads. It's right. That's right. Wow. Wow. Whoa. All right. The bond market is crashing. All right. That's interesting. So I guess we need to jump right into it. There's some trouble in China right now again. W One of them is directly related to real estate. You remember Evergrande about a year ago? Big, huge property developer. And to give you a sense of the size of these Chinese companies, if you look at every skyscraper in Manhattan, old and new, just every one of them, that's how many Evergrande had in process of building at once. It would be like the equivalent of one company building all of Manhattan at the same time. So, anyways, about a year ago, they got into trouble. Another huge company on that scale, building residential skyscrapers, um, is now defaulting. They're not paying back their loans. And also, there's a company in China, which is a wealth manager, kind of like a Merrill Lynch or um, Morgan Stanley. What do they call the Jones one? Anyways, wealth manager type kind of thing. It's also in serious trouble. So that's interesting. Maybe our huge move here in the 10-year T note is somewhat related. That's amazing though, because going from memory, a couple of weeks ago, we were around here around 4.2, and then it was 3.99, and now it's 4.2 again. Those are big moves. Those are very big moves. So, anyways, keep your eye on that one. Wow. Okay, oil's coming down back to 83. That's sound. I think not long ago it was 82. So that could be a one to watch. Gold, I know we've been struggling with that price data. Has gold got the right price today? Let's double check that. It never hurts to check your facts. Um, I don't know. Again, wow, there must be something in my browser, but I get nothing but ads now. No, it's what, 1912, isn't it? Anybody? Does anybody have a Comex says 1912? I suppose it depends which gold. No, but it's 1912, huh? Yeah, I'll have to yell at them because we've been stuck at this price. I've yelled at the developers a couple of times, and they're like, "It's fixed." Yeah, so yeah, about 1914. That makes sense. All right, so careful, but when the rest of the data is just that one little number is not updating for some reason. All right, S&P 500. Remember 3 weeks ago? When were we at 4800 or something? And the price target was 44.44. I believe we actually hit it. So we got to watch S&P 500 this week, um, which makes me think and then think and think. And I've just remembered that I must tell you I won't be here on Friday or Monday. I will be in Cuba doing economic research. What made me think of it is next week is the week I've planned on 6 months ago to be ready to buy the S&P 500, just to be ready. And so right now it's flat and we've fallen down to my target, which was part of the seasonal plan. Thank you, QuantBox. Um, but I'm not really expecting the move yet. But we are at an interesting price. So if we just fart around for 2 weeks here, maybe in 3 weeks we start going back up. Who knows? Um, so a little bit early yet. Still at 110 on euro dollar. Bitcoin still just mucking around between 29,000 and 30, but not even really trying to get up to 30,000. So quite flat. Still generally bearish, which is what we planned for well in advance. We thought this would be happening through the entire month of July, but July ripped. July was a big risk on month. So we were actually blessed. We had another decent month before just boring consolidation. So cool, right on. So now we're in boring consolidation and it's totally normal and predictable. Nice. Taking a look at where the money is resting. Okay. That's interesting. Huh? Look at this. 55,000 new contracts along the 10-year, which is interesting because that I mean, this is almost a week now old. And if you remember, we were at 4.2 and then suddenly it dropped to 3.9. That's what this is. Or another way of reading it is even though 55,000 more contracts went long 10-year T note, double that went short. Nonetheless, let's say it's the net change that you're looking at. You're either looking at like absolute long or short, or you look at the net. And in this case, there's double the amount of shorts on the 10-year T note, and that would have the yield going up. And that's a pretty high yield. 4.2 is pretty high. Interesting. So, money going into the short, and that is actually working. So somebody's making money there. About 70% of the market is short the yield on the 10-year. And that's why it's falling. Interesting. Is that the biggest move? Probably. Yeah. Money coming out of gold. Look, like 10,000 less contracts long gold and 12,000 new contracts short gold. We're losing bulls and adding bears on gold. Remember, for a while there, I was the only fool in town talking gold down. Everybody's like, high inflation, gold's going up. I'm like, that actually doesn't make any sense. Um, and now you can start to see the market. Remember, gold was very, very bullish. Um, and this is including institutional investors. And now that maybe that's a little bit of vindication. Maybe it's just starting to come back around. I don't think there's a collapse coming in gold. But my big, hairy, audacious idea is that gold could go to 1,800. Not that it will, but it could under certain conditions. Why not? Okay. Now, for those quant boxers, you might have just looked at this over the weekend because this is the kind of data that you're supposed to be looking at on your own. And you probably looked at this. But did you look at this? You might have forgotten you have to keep scrolling, baby. Keep scrolling. This is a new tool. And this is looking at euro dollar. Okay. Green being euro, this being dollar. When you combine, you can see the positioning is still favoring euro over dollar. This is the number of bulls long the US dollar, number of bulls long the euro. Now we're losing some euro bulls, but we've already lost quite a few US dollars bulls. What I would look for if things are going to get nasty is the US dollar start heading up. Right now, what I'm actually seeing is, uh, obviously the dollar being a reserve currency, people came out of that. There were all the trades would have been related to dollar in general. And now what we're doing here week over week is we're losing volume from both assets, right? And I'm sure in many cases, as we go through, if we went through and changed these currency pairs, you'd find the loss of volume from almost anything. Like we can pick a pig dog. And oh well, actually a little went into pound. Interesting. But slight favor, right? Right? Slight favor to the pound here. That one actually held pretty steady. Cool. Anyways, so you can start playing around with this and finding biases as you compare. So, like, how about euro yen, for example? Okay. And generally speaking, bullish, 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 bullish. And generally, and then this is not the contracts, but the actual price. So euro yen has actually gone up. Week after week after week after week after week, this asset has been bullish and it's generally gone up. Does it look like it should come down yet? No. Oh, but what about yield curve control? This information is gathered for you by QuantBox from looking at actual positions in the market. It's not a sentiment indicator. It's not using deep math. This is the position of institutional investors. They are, without a doubt, week after week after week, bullish on euro yen. Okay? And that doesn't seem to have changed. Yeah, look at, we went from this many to this many. So, anyways, that's how you use this tool. Cool. Quickly taking a look at the scatter plot. Japanese stock market way down, negatively impacted by that Chinese news. How about that big China recovery that's going to save everybody? That's been canceled. Is that good for the stock markets? No, probably not, huh? So it shows you that's such a big move relative to everything else. It skews the data set. So we call this an outlier. You can get rid of that, remove the outlier, and get a better view of what's going on. And now oil is radically different. Now notice that oil's only negative 0.46, but still relative to everything else, that skews things. So I'll remove oil. And the biggest losers and the biggest winners in the currency markets are actually not anything. Look, the biggest winner is 0.13%. The biggest loser right now, Bitcoin, negative 0.06. So nothing's happening. Don't invent an opportunity in your mind. Don't see a mirage today. The worst thing to do is lose a bunch of money when nothing is happening. Totally preventable disaster. South African rand is just being crushed. But notice that over 7 days, the biggest winner out of all the assets is up less than 3%. That's not that big of a deal. And for an emerging market, higher volatility type asset that trading the South African rand just happens to naturally be, that's not a big deal at all. But these yen pairs, like imagine you were holding these trades for longer than a few minutes, right? Remember the motto of QuantBox? Let your winners run. Well, I want you to look at these things and like, okay, well, if I had held my yen trades for 7 days, they'd be up about 1.5%. Doesn't sound like a lot, but that's only 7 days. If you're doing 1 or 2% a month as a fund manager, you're doing fantastic. You're like Wayne, but That's only 2% a month. Well, that adds up to about 30% a year. You'd be one of the best trading firms on Wall Street by a country mile, right? So you got to put things into perspective. These are weekly returns, and they would be a good 30-day return. So, anyways, not bad for a flat market. Biggest loser is Nasdaq, which we talked about, for a super long time. That's the highest beta. Makes a ton of sense that that would come down hard. Kiwi dollar, Kiwi Swiss franc, Kiwi CAD, Aussie dollar, Aussie Swiss franc. Wow, Aussie CAD. You see the theme here? Commodities and stock indices. FTSE is down, S&P 500 is down. Okay, interesting. Eventually these things will flip, I think, but not quite yet. So it'll be very interesting to see where the stock markets go this week. Uh, you know, some up, some down, some sideways, that kind of stuff. Now, this week we have some different news events. Retail sales tomorrow is on my mind. Let me swap this out. Mm. There we go. Let's do high only. Let's see if it'll organize itself properly. So retail sales, okay, that's going to be a doozy. We want to watch that. No, that's the one I wanted. Although this is interesting. When it comes to retail sales with autos, um, that industry is flat. Like, don't lose sight of what we're trying to do here. I don't give a darn about any one of these high events. I'm trying to figure out: are we going to go into are we in recession right now, or are we going to soon be in recession? That's what I care about. So, how would you feel about an economy that has no growth in selling new automobiles? Does that sound healthy? Nobody's buying new cars? That doesn't sound that great to me. Now, it shouldn't matter if you had dollars. If you had money, it wouldn't matter. So you're like, oh, I want a new Porsche. How much is it? 120,000. Cool. I'll cut you a check. Um, but people are sitting down and financing these things. Well, interest rates are nearly 10% on a car. That's the problem. The Fed did that. Now, that's what the Fed's trying to do, by the way, cooled off the economy. So if you ain't got no money, you stop spending money you don't have. But nonetheless, it's a sign that, I don't know. I don't know if that's going to be the thing that breaks, but it's just another sign that things are actually slowing down. So, anyways, we will break that down into smaller pieces. RBA, yeah, I think you should probably be treating Aussie and Kiwi this week, especially with more and more bad news coming out of China. China is in recession, and yet much of the world was waiting to be saved by China. Hmm. Well, they got that wrong. So, RBA meeting minutes, China retail sales, industrial production capacity utilization statistics. Okay, that's big. That's big. Most people will miss it. That'll come out in the middle of the night. Yeah, like jobs out of the UK and all that kind of stuff. But I want to get to this. Okay. And we're going to learn, I don't know, nothing. But everyone's trying to decide, is the Fed going to raise or pause in September? What I said, I don't know, 3, 4, 5 months ago, that September would be a pause. And the one after September will be a hike. And then we'll stop. And I can prove that with QuantBox. Not like I don't know the future, but that I know what I've been told. So, anyways, this could be interesting, but I don't think we'll actually learn anything about it or from it. But I think much of the market participants will be very interested in that piece of news and that piece of data. Maybe you should read it. Anyone want to be so bold as to commit to their right to reading it? Yeah, right on. Okay. Then later on, getting to this inflation rate. I mean, yeah, so jobs I kind of skipped over, but it's so ridiculously high right now. They got to get that inflation number down. And of course, it's expected to come down. And a lot of, I mean, it's obvious a lot of the inputs to that inflation have come down. And the question is, does it have anything to do with the UK government or the Bank of England? And my answer is, probably not. Um, they're doing the best they can, and it's a complicated situation, but it's this is falling. But if oil's going to $100, this is going back up. Or if natural gas prices are going to go back up in Europe as we approach winter again, and just the fear of having shortage of energy, just the fear of a cold winter. If this inflation goes back up again, what are they going to do? And it's going to be a complicated situation for the UK. Okay, inflation out of Japan usually isn't a big deal, but now we know the Bank of Japan is monitoring their yield curve control policy. And so if this comes out, high 3.5, 3.6, it could entice them to again relax some of their yield curve control. So we want to keep an eye on that because that's what we care about. Ultimately, we only care about the change in policy at the central bank. Goldman Sachs said that they expect the Fed to cut interest rates at the June meeting next year. And so everyone's like, "Oh, they're geniuses, Goldman Sachs, geniuses." How do they know these things? They subscribe to QuantBox. Well, I can't prove that. And even if they did, I wouldn't tell you. But I'll show you. QuantBox know these things to be true. Uh, Goldman Sachs didn't tell me, but I already knew. Probably, well, at least what was it, 3 months ago when the summary of economic projections come out. So today, like this morning, Goldman Sachs sent out a press release that they now are looking at that third quarter for a Fed cut. Genius, genius, genius. Um, well, I had it plotted out for you months ago, and so you're smarter than Goldman Sachs. Or let's say you knew before Goldman Sachs sent out a press release. Everyone else is going to talk about it today. Oh my God. And then the Goldman Sachs people are going to go on TV and podcasts and all kinds of things. And it'll stir the honeypot, and all the clients are going to want to talk about it. And this is the big thing that they're going to do at when conferences open back up in September and October, and everyone's going to want to talk to Goldman Sachs about it. Well, the Fed told us about 3 months ago. So they're not that. They're smart, but maybe not genius, huh? No, but what does it say to everybody else that doesn't know? Like, why doesn't the whole entire financial industry say, "What the hell is this Goldman Sachs press release?" Like, dude, common sense, yo, who cares? No, they're everyone's going to want to talk about it, and that to me is the shocking thing. So at least we're on the smart side of that equation. All right, so I'll leave you to it. I'll let you do your charts, but it's going to be an interesting week. Right now, it's expected to be mixed, mixed, but leaning on the downside. That's the same thing we've been doing for 3 weeks. And news out of China ain't good. So, could there be a giant stock market rally in America today? Yeah, there could be, but probably not. There's a little bit of risk off sentiment because China's not doing well. Tomorrow's going to be retail sales. Is that going to be any good? Well, in particular, it might be strong, but is it slowing? Is it slowing in some sectors? Well, we'll have to break that down and digest those individual pieces. So we might find nobody's buying new cars. We used to complain there were no new cars. Well, next year there'll be plenty of new cars to buy, except you'll be looking at the 2025 model, and the 2024s will still be on the lot, and there'll probably even be some 2023s. And you're like, which one do I want to buy? And they're all on sale, by the way. Problem is, in 2025, no one will have the cash if we're in recession. So you got to take care of business now. Cash is king. If we go into recession, cash is king. Yeah. Classic example is in that 2008, 2007, was it 7 or 8? I guess 2008, somewhere in there. Uh, I bought a car worth 60 or $70,000 and I paid 27,000 because at that time banks were not loaning. You could not get a car loan. Banks were failing. Car dealers were failing. This guy was actually a car dealer. He owned the dealership. This was the nicest Mercedes on the lot. It was a couple of years old, but it was owned by the dealership and it sat there for a couple of years. Cool. And nobody could buy it. It was a worthless piece of junk, this beautiful exotic car. No one could get financing. Nobody had credit. But if you had $27,000 in an aluminum briefcase, it's yours. Yeah. Cash is king, baby, because that cash could buy a lot in a down market. And I saved his house. His wife and children would have been thrown into the street if it wasn't for me. So I'm not a greedy capitalist that got a car for 27,000. I saved his family. So anyways, cash is king. That means you got to earn your cash now so that if things do get bad, you'll be in a position to benefit on the long run. Anyway, so you want to buy at the bottom, right? So, anyways, you got to know when it's coming, and you got to know where the bottom is, and that's what QuantBox helps you with. Economic research. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Cheers.